Good morning, good morning, good morning, good morning. We're about to close a weekly candle, and I hope you guys had a fantastic week thus far. We have a lot of interesting things to talk about today. So we're going to start with an outline of what we're going to talk about because it kind of all feeds into each other. The story over here, guys, is beginning to get really interesting. Story, guys, that is pointing towards Bitcoin having a 50% pump to the upside. Because on one hand, we have Charles Edwards with his new evaluation tool called the Bitcoin Yardstick that is saying that according to this tool, Bitcoin is at one of its cheapest prices ever. Now, this may draw some controversy over here because he's using hash rate as an input for this measurement, but that doesn't change the fact that what he's saying over here lines up with what price is doing, because price at the moment is showing a massive equilibrium imbalance that wants to get filled. So in this video, I'm going to be explaining what this indicator actually is. I'll also be giving you guys a brief explanation on what hash rate is for those of you who don't know. And we'll be going over this chart over here that you guys can go ahead and play with on Glassnode as well, that shows you guys when Bitcoin has been extremely cheap and extremely expensive according to this evaluation tool over here. We also have a couple of charts over here at the bottom that pieces the puzzles of the story together, showing that, hey, Bitcoin now has the silver cross that we've been waiting for. And on the lower time frames, we do have resistance that may give us a nice entry for this big potential trade on Bitcoin towards the upside, the 50% trade. So let's go ahead and get started. And right over here, I've blown up the tweet for you guys so that way I can break this down for you guys very simply. And over here, Charles Edwards says, today we are seeing valuations unheard of since Bitcoin was at $4,000. So the last time this tool pointed to these levels right over here, guys, was when Bitcoin was sitting at the 4K region back during COVID and also back during the 2019 dump, right? But what exactly is this tool telling us? What exactly is it measuring? And honestly, guys, it's actually very simple. The Bitcoin Yardstick tool simply takes market cap, Bitcoin's market cap, divided by hash rate. Now, this is where it gets a bit controversial. And to explain this better to you guys, let me break down each component of this formula. First, we have market cap, and that's pretty straightforward, right? Market cap is simply the amount of coins in the network multiplied by the price. The important thing to note over here is that market cap is simply a derivation of price, right? Because market cap is calculated from price. Now, what exactly is hash rate? The simplest way to understand what hash rate is to view it as a representation of the amount of energy required to secure the Bitcoin network, all right? Is the energy required to secure the blockchain. So market cap is a representation of price, and hash rate is simply a representation of the amount of energy required. The Bitcoin Yardstick is simply a ratio of market cap to hash rate. So it's essentially telling you how much you are paying for your Bitcoin compared to the amount of energy used to secure the Bitcoin network. So the lower the ratio over here, the cheaper you are able to buy security from the network. Because remember, energy going up means that your security of the network is going up. Right? And right over here, guys, on this chart, the blue line that you guys see is the representation of the hash rate of the Bitcoin network over time. And notice something really interesting over here. Hash rate has recently been going parabolic. In fact, they are at all-time highs, while price is sitting at its cycle lows, right? This massive deviation over here is essentially being represented by the Bitcoin Yardstick, because price over here, the numerator, guys, is very low, while the energy cost is really high. And the last time we saw this ratio was all the way back during COVID and also during the 3K dump. So what this is telling us is that based on the amount of energy put into the security of Bitcoin, you are buying the network for extremely low prices. Now, the reason this is controversial, guys, is because people say that if hash rate is being used as a input for the formula, this can be completely dismissed because price leads hash rate and not the other way around. What does this mean? Essentially, people say that, hey, only if price goes up will hash rate then follow and go up as well, because price is what incentivizes miners to come in and put in energy onto the network to secure the network. Because remember, guys, miners are rewarded Bitcoin for securing the network. So the price of Bitcoin is their incentive to secure the network. So that's what people say. Price is what will lead hash rate to go up and not the other way around. But wait a minute, that's not what we're seeing over here, right? What we are seeing over here is that price has been consistently low for a few months now, while hash rate has been going on a parabolic run. Now, here's the thing. I completely agree with this sentiment over here that price leads hash rate and not the other way around, because hash rate is essentially the cost that miners have to put into mining their Bitcoin, right? So only if Bitcoin is at good prices will they be incentivized to actually apply increasingly more hash rate into the network. But what is going on over here then? Why are we seeing such a huge deviation between price and hash rate? Clearly, the miners believe that it's worth putting in this much hash rate even when price is sitting at these lows, right? So they are dismissing these prices and they are looking towards the future Bitcoin prices and saying that, wait a minute, these prices are way too low. We are willing to put in hash rate because we are expecting price to come up eventually. Now, this is going to get dismissed as well, and people are going to say that, wait a minute, that's just miners that are speculating, right? You're going to say, hey, this is miner speculation, and it doesn't matter because price is what leads hash rate, and the miners are going to get wrecked. And yes, I do agree that some miners are going to get pushed out because of inefficiency, but you can't just dismiss miner speculation because they are part of the market. And I believe that the markets are now maturing to a point where you can actually look at hash rate and derive a implied Bitcoin price based on the hash rate. You can actually imply a Bitcoin price, or at least an implied miner Bitcoin price, right? What do the miners as a subsection of the market believe Bitcoin's price should be? They don't have to be correct. They could be wrong about it, but this is their implied Bitcoin price as a subsection of the market. And simply dismissing this info and saying that, hey, price leads hash rate, so this information does not matter, I think that's a bit misguided, because I believe there is information over here, especially when you combine it with the rest of the story that we are seeing on Bitcoin's price chart at the moment, right? And we're going to be coming back to the chart very soon, because this is also pointing to a massive disequilibrium. So not only do we have the fact that there's disequilibrium between prices and hash rate, we are also seeing disequilibrium on the Ichimoku chart, right? And we'll be coming back to this in a bit. I want to quickly go over the chart over here. You guys can find the chart on glassnode.com yourselves and play around with it, but it's essentially telling you the zones based on the Bitcoin Yardstick, right? The zones where Bitcoin was cheap, right? So green is the cheap areas, pink is the risky areas, and purple, I believe, is the expensive areas. Now, I'd use this with a grain of salt, guys. Do not use this indicator as your be-all and end-all indicator. In fact, I can show you guys a couple of areas where this indicator did not get it right, especially if we used it as a way to call the top. So right over here, you guys can see, now remember, the black line over here is a representation of Bitcoin's price, right? The black line is the representation of Bitcoin's price. You guys can see over here, you had the 2017 rally. This was the most recent 50K, 60K rally. And the blue line over here is the Bitcoin Yardstick. And remember, Bitcoin Yardstick is simply MCAP divided by hash rate, right? And you guys can see that during the zone over here, right, we were seeing pink, right? This zone over here, we are seeing this entire area be pink, but price was only at around $4,000. Now, we did see a bit of resistance over there, but after Bitcoin came back down and got picked up, Bitcoin went up from $4,000 to $20,000. So if you use this as your be-all and end-all indicator, you would have missed out on another 5x after that. So I'm not saying don't look at this indicator. It's definitely going to be a good tool to keep an eye on. And at the moment, it has done fairly well in getting good Bitcoin prices, especially for long-term Bitcoin holds, right? So you guys can see that right over here. This was when Bitcoin dumped down to 3K to 4K during COVID. This was the bear market, but remember, it was pointing green for the entire zone for 6K as well. And I think Bitcoin bounced all the way up to like 9K over there. So this entire zone, the Bitcoin Yardstick was green, right, pointing to cheap. And of course, during the 3K as well. And again, Bitcoin was cheap during this area too. So you would have been buying the parabolic highs, and it dumped back down. So you would have been fine in the long term, right? But do not use this as your be-all, end-all indicator. I just really like the fact that this is lining up. This is lining up with the fact that we are seeing a massive equilibrium trade on Bitcoin's 4-day time frame, guys. And we're going to go on over to the charts now because I think that's where it's going to be best discussed. Alrighty, and here we are. We're looking at Bitcoin on the 4-day time frame, and I have my Ichimoku template open. Now, I'm going to go ahead and quickly explain the components to those of you who aren't in the seed program and do not have a basic understanding of how the Ichimoku works. So essentially, guys, the blue line over here, right, the stair-steppy line, that is known as the Tenkin. The red line over here is the Kijun. We also have another red curving line over here. That's a moving average. That's essentially your 4-day 200 moving average. All right. Now, the way this trade setup works, okay, this equilibrium trade setup is essentially when you see the blue line of the Tenkin flatten along with price live above it, okay, that's when you have a potential big trade all the way up to the flat of the Kijun. Okay. Now, this is where it gets interesting. We don't have the Tenkin flattened anymore. It was flat for a very long time, but that was when price was living underneath it. So at that point, we use the Tenkin as resistance. But as soon as price starts living above the Tenkin like it is right now, we use the Tenkin as support. But the Tenkin isn't flatlined anymore, okay? Tenkin is kind of curving down. So what we are waiting for now is for the Tenkin to start flatlining, because that will give us a huge trade all the way up to the Kijun. And that, I believe, guys, is almost a 50% plus trade. Yes, around 55 to 60%. That's going to be a big trade. And this is lining up with the disequilibrium that we are seeing with hash rate and price on the chart that we just showed a minute or so ago, right? Now, again, we don't have the Tenkin flattened just yet, so the trade isn't activated. But what we do have going in our favor is the fact that the 21 EMA, I'm going to turn it on right now, is now reclaimed by price, or rather price has reclaimed the 21 EMA. So we have price living above the 21 EMA and we have price living above the Tenkin. This is the recipe, guys, for price to start drifting towards the upside. And that's going to be the recipe for the Tenkin also to start drifting up and flatlining. That gives us a potential C-span trade between the Kijun and the Tenkin, potentially testing the 200 moving average on the 4-day, coming down again to the bottom of the cloud. Now this depends on where price tests the 200. If we test it somewhere around here, we're going to come all the way back down over here, give ourselves a higher low, and then make our way all the way to the top of the cloud. So this is essentially the trade setup that we're looking for, and there's some long ways before we actually see it all play out, right? But thinking ahead like this lets us mentally prepare. And hey, guys, I've played this trade setup multiple times in the past, and it's played out really well. Back in the 3K zone as well, we played a very similar trade on this edge-to-edge trade on the cloud. A lot of people were wondering, how did I get my big, huge trade targets all the way up to the $13,000, $11,000 region? Well, it came from playing the Ichimoku, right? The 4-day top of the cloud was pointing all the way up to 11,500. So yeah, keep an eye on this trade setup, guys. The fact that it's lining up with what we're seeing on the disequilibrium on the hash rate versus price as well is giving me a little bit of increased confidence on this trade playing out. Now again, I'm not calling for a bull market reversal. I still think that at the very least, the top of the cloud is going to face some serious resistance. I do think that if we start seeing multiple 4-day candle closes above the Tenkin and the 21 EMA without price being pushed down over here by the bears, this is going to make its way up to the Kijun. So keep an eye out for that. Now, I want to also point out something on the dashboard. Is lining up with this, guys. And I almost missed this myself on my own analysis, which is again making me very, very confident on the power of the dashboard. If you guys switch on over to the 4-day time from the dashboard, you're going to start seeing that the potential bullish divergence has triggered. In one of the last videos I did over here, I said, guys, we're seeing bearish divergence being triggered on the dashboard, but if price starts drifting up, we will see this convert, right? We will start seeing this bearish divergence get completely negated. But what's more, guys, is that it's now flipped into bullish divergence. And if you switch back on over your charts, I'm going to do that right now. Okay, switch back on over to our Bitcoin trading view chart, and I'm going to switch on over to the same time frame on the 4-day time frame, but I have my oscillator template opened up over here. And on first glance, you may miss the bullish divergence, but if you look closely, you're going to see this wick low over here that took out this wick low. So price made a lower low, but on the actual oscillators, you're not seeing that. In fact, the oscillators made a higher low, right? Look at the slope between this point and this point over here, guys. While price did this. And we were talking about this in the seed as well. So if you're watching this Bentai, this answers your question. We have bullish divergence between this point and this point. It got triggered on this candle close over here as soon as we took out this high, and it's making its way to the upside now. Now, if we start taking out these levels over here around 21,600-ish, the next target is 24,450. But keep in mind that we also have the 4-day C-span trade that is pointing all the way up to 33,000, right? What else is pointing up to a potential run? Well, if you look at Bitcoin on the daily time frame, right, we got the silver cross. So on the mid time frames, guys, the 21 EMA has crossed the 55. Now, not a lot of people look at this, but this is an important cross. This is a cross that suggests whether the bulls are gaining momentum or the bears are letting go of their momentum. And over here, we are watching this cross during the last attempt by the bulls towards the upside of the range, right? And the bears did not let it happen. You guys can see that we are waiting and hoping for this to push up, but it didn't happen. The bears closed price down. We got the retest. Everyone exited out of their positions, right? Look at the candle that followed, the rejection of the cross. If price kept drifting even for a tad bit more, we would have got this 21 EMA crossing the green 55 like that, but we didn't. Price pushed down, rejected the green 55, closed underneath it, and boom, 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 downtrend ensued. Now, however, the opposite happened. The bears tried to reject it. Bulls pushed up and pushed up with conviction. So now that we have the cross, what's the target for this bull move? Well, we do have a trend target for this move, and I want to specify trend target because the trend target means that we could come in, put in a high low somewhere, and then make our way to the upside. And the eventual upside target is going to be essentially the 200 exponential moving average along with your 200 moving average, right? You want to look at both of them. We're going to turn on the mango ribbon. By the way, this is completely free. You can find access to this indicator at themango.com/ribbon, themango.com/ribbon. I believe that is the link, and you can essentially put it down your email and you get access to this indicator. So yeah, mark out the zone here, guys. I'm going to read it out for you guys. 24,934, 200 EMA, as well as $24,000 is the 200 moving average. So this zone is going to be the target. But remember, this is just likely going to be an initial target, because if we start seeing this move play out, guys, high, low probably, and a break, this squeeze is going to lead to that $33,000 move that we're looking for based on the 4-day time frame and the disequilibrium between price and hash rate as well. I do think there's something there that we should not be ignoring. The market will ignore it, especially in this phase of the market where sentiment is so low. They're going to be like, hey, price leads hash rate, right? So ignore the fact that hash rate is forward implying a higher price. And I can talk on this way more, but yeah, we don't have enough time for in today's video. We do have short-term resistance over here too. If you guys are playing the 4-hour time frame, if I were you guys, I'd be marking out these wick highs over here along with this entire zone. Actually, this entire order block, in my opinion, what I'm looking at over here, guys, is this zone, right? This, go ahead and mark it off again. This entire order block, in my opinion, is going to be some resistance on the lower time frame. So price is actually right up against it. So yeah, my resistance level that I'm using personally is somewhere around here, right? Around 25 21,550ish, but I think this might be the better resistance level to be using now that they're on the fly. It's lining up perfectly. A massive weekly close coming up as well, and the weekly resistance is at the top of the zone over here at around 21,900ish. We do have the weekly 21 EMA pressing down on this as well. And again, I should remind you guys that the discount to the C program will be ending as soon as we claim the weekly 21 EMA. So the discount is essentially, as long as we are underneath the weekly 21 EMA, you get a 21% discount. It's essentially the largest discount we have ever ran, but that discount ends as soon as we claim the 21 EMA, and the discount is 21 under 21, right? So that's all you have to type into the coupon thingy, 21 under 21. All right, there's not much else to speak on today. I'll give you guys an update on Tuesday, I believe, right? We have the weekly open tomorrow. I'll put together some notes for you guys and do another update analysis. Do you guys enjoy this content form? Like, do you guys enjoy this format? Let me know in the comments down below. Your feedback is really, really important, and accordingly I will stick to this format or not. All right, I'll see you guys in the next video. Ciao.